Good afternoon. This is Doug from ForexTradePlans.com. I am recording this video at 2:30 p.m. New York time, which is also Eastern time, on August the 7th. In my previous video, which was really supposed to be a two-part video, this is not going to be part two of that video. The first part, I was explaining how my calculations system, which is Excel-based, works, and how it takes it uses a data feed which enters in the open, high, low, close, also known as the OHLC, and then calculates all the different pivot points over various time frames, such as the monthly, weekly, daily, 4-hour, 1 hour, and 15-minute, even annual. In fact, last year's range, for example, was 2,000 pips. That was last year's range. So I have all this data here, right here in front of me at any time, and it could be a very powerful tool. I am not going to explain to you, though, the spreadsheet on this video, because I already did that in the previous video. I'm just giving you a quick review, and here we have the pivot levels, and here we have the fib levels, and really regardless of the time frame, it doesn't matter. The calculations are all the same. Of course, many people might find it preposterous to even look at a 50-minute or a 1 hour. I really don't pay attention to the 15 minutes. Sometimes I take a glance at it. What I usually do is I want to take a look at what the previous 50-minute range was. It gives me an idea of really if the market's even worth entering trades. In this particular case, a previous 15-minute candle was only 3 pips. Let me do a quick update. OHLC, okay. And now let's take a look. All right, now the previous 15-minute candle shows 12 pips, so things are kind of beginning to move a little bit. Let me just do this. The previous 4-hour candle only moved about 29 pips. The previous hourly candle went up 7 pips, and the previous 15-minute candle fell 12 pips. So a little bit of volatility is picking up a little bit on the 50-minute. That's a healthy range for a 50-minute candle at this time of the day. But once again, I'm not going to really get into all this. I do not look at the spreadsheet when I trade that much. The only thing I may look at is this data right here. This is it, OHLC data, ranges. But I don't actually trade off the spreadsheet because I don't need to. Because all these values are put onto the chart, okay, in the form of these lines, okay. As you can see, let me right-click here, and we choose the objects, and you can see, got the high, low, central pivot point, R1 through R3, S1 through S3, M0 through M5. Here are your fib retracements of the previous period's range. And I emphasize that word period, regardless of whether it's a daily candle, a 15-minute candle, an hourly candle, 4-hour candle, it doesn't matter. It's still a period. Okay, so the previous period. So here you got so these are your fib retracements. Here are your extensions. These are your resistance extensions and your support extensions. By themselves, they don't really mean much to me. But when I overlap them over multiple time frames, they do mean something. And then taking it a step further, combining it with these EMAs, exponential moving averages, which, by the way, are fib values as well. We got 5, 13, sorry, 21, 55, 144, and which I don't. Let me expand this. 233. So these are all Fibonacci values. As you can see here, I have them here in my notes. In fact, the ones here bold are the ones I use. I use 5, 13, 21, like I just showed you, 55, 144, 233. These are all, this is the fib sequence. This is very important stuff, so pay attention. But what I wanted, anyway, the second video was really going to be me entering a live trade, which, by the way, I am going to do that, and I'm going to record it on video. Last night, I was very tired, and I wasn't even in the mood to trade, and I really didn't trade. I really went to bed. But I did enter a trade on this demo account, and this is the trade I entered. And I entered this trade based on these calculations, and I wanted to explain it to you. First, anybody can say after the fact that they entered the trade, so I'm going to prove to you that I did enter the trade. And for me to prove that to you, I need you to pay very close attention to a couple little things. If you look right now at the clock on the lower right hand corner of my computer, let me just zoom in here for a second, you'll see that it is 2:36 p.m. on August 7th, 2012. 2:36 p.m. Now, if you look here at this 1 minute candle, and you look here, this is the clock down here, right here, see? If I go ahead right now and I put my mouse over here, it's showing you that it is 8/7, August 7th, 1837, which is 6:37. So if it's 2:37 here on my computer clock, but here it shows 6:37, well, you see MT4 is 4 hours later than my computer time is. Okay, I just wanted you to understand that. So when you look at the at my trade records, it's going to be based on here. Okay, right here. Last night, right before I went to bed, I saw an opportunity. And that was here, when price came down here to the central pivot point. This was an area where I was definitely open at entering a trade. Now price was falling, and then it came down here, landed here, and this is where I entered the trade. I'm going to prove it to you in just a second. Now, I entered this trade right here, but this candle here, you'll see it's... if you look here at the bottom, down here again, you'll see that this candle evolved at 6 o'clock. This is a 50-minute chart. This evolved 8/7, August 7th at 6 o'clock in the morning, and then this candle here evolved at 6:15 in the morning. Okay, so that was 2 o'clock in the morning my time, obviously. 2:15. I entered the long. I'm not going to lie and tell you I entered it right here at the very bottom. I entered it right here on the central pivot point, which was at 1.2385. It was overlapped with this with the fib of yesterday's range at 2384. So I really saw two reasons here to consider entering this trade as a long. I was also taking notice that let me zoom in here. We were also, when I entered the trade, falling down and hitting the 5 EMA, exponential moving average, and we were actually at the time we were poking the Bollinger Band, the lower Bollinger Band. So that right there was 4 different reasons why I should consider taking a long. Okay, at 6 in the morning. Now, let's go to the hourly chart for a second, and at 6 o'clock in the morning. Okay, this is the candle at 6 o'clock in the morning, and as you can see here, it was also poking. By the way, this trend line was not here. I'm not gonna. I actually just put this trend line here a little while ago, but it wasn't here yet at the time. But so I didn't trade because it touched this line. In fact, let me just remove that line. I looked at this and I saw, well, here we are actually touching a fib retracement of last week's range, and we're also touching, poking the Bollinger Band, the hourly Bollinger Band. Now, at the time, the Bollinger Band was very narrow, and I didn't really expect too much to happen because this is a sign of low volatility in the market when the band is narrow like this. But nevertheless, if I had 4 reasons here to enter this trade: the pivot point, the fib, the lower Bollinger Band, and the 5 EMA. The hourly gave me 2 reasons: this Bollinger Band as well as this fib. And on the 4-hour chart, this would have been the candle, okay? And this would have been this was the candle at the time I entered that trade, and that gave me further reason. I'm sorry, right here, 4 o'clock, the 4 o'clock in the morning candle, okay? I saw it come down to this fib retracement, okay, right here, and I really thought it was gonna bounce, from here. So I had 5 reasons to. I'm sorry, I had 7 reasons to look at taking a long here. And also here on the daily time frame, the daily candle was touching here the 5 EMA. Okay. So that was really like 8 different reasons to want to take a long. So I took the long. Of course, anybody could say that talk is cheap. So let me show you. This was it right here. See, August 7th, 6:04 in the morning, which is 2:04 my time. Euro dollar. Entered it at 23.84, which, like I said, was here, central pivot point and the 50% fib. Now, it continued to fall a few more pips. It came down to 23.88. So I entered it at, no, I'm sorry, it actually fell all the way down to 23.74. Okay, so I entered the trade at around 23.84, and it came down 10 pips. So I was a little nervous. I don't even like to be 10 pips in downdraft, but you know what? I stuck with the trade. I left it alone, and as you can see, it fell down 10 pips. But look what happened. It bounced right above this fib retracement, so this is a backer. Not only that, but as you can see, price fell outside of the Bollinger Band, and usually when price falls outside of the Bollinger Band, it's due to snap back up sooner or later. Remember, over 80% of price action takes place within the bands. Only less than 20% take place outside of the band. So when price falls way outside of the band and hits some type of other, area of support or resistance, it's an area to really consider taking a trade. But I took it here, so it fell down to here, and then it took off, and I actually gleamed 47.8 pips. Let's just say I gleamed 48 pips. It was actually up to 50 pips, and I decided to get out. And there was a good reason why I decided to get out. But first, let me show you. I got out at 1.2431, which would have been here. 24. So I entered here at 23.85, and I got out here at 24.31. Now, isn't that like remarkable? I mean, technically, I entered this long 10 pips above the low. Okay, the lowest part of the today's range, and I got out here, and the high, today's high, was 1.2440, 2441. So I got at 2431, and it continued to go up just another 9 or 10 pips. So I really got the meat of the move. Got the meat of the move. I got most of it. I got in most of the range, and the platform doesn't lie. As you can see, I'm not lying. 6:04 in the morning, which is what time it was here, as you could see. No smoke and mirrors here. Okay, this is real, and this is the price, which coincides with what you're looking at right here. And so anyway, that's what I did, and it worked out. Now, why did I get out here? I'm going to show you why. When price came up to here, well, first of all, I really wanted to get out because here we were at the R1, and the R1 is it is a take profit area. Okay, traders will get out of trades in areas like R1 or R2. Okay, you have to understand pivot point theory, which I'm not explaining that to you today, but we could talk about that. It's actually explained on my website, forextradeplans.com, and it broke a little bit above the R1, but it poked the upper Bollinger Band, and as I just said a few minutes ago, when price pokes the Bollinger Band, it has a tendency to snap back, and it did, as you can see. It poked it, and it snapped back. Now, this R1, though, was not the primary reason why I got out of the trade. I'm going to put this into multi-chart view for a second. This was the reason, because this overlapped. This is 24.34. So I got out at 24.31, which, you know what, I'm going to put this yellow line. These yellow lines all I want you to look at these yellow lines on each of these charts. I'm going to put another one here at the same level that's here, and here's 24.31. So here's 24.31 here, and here's 24.31 here. And I'm going to put another yellow line on this chart at 24.31 level. Right here. But what I want to really point out is if you look very carefully, I guess I'll have to zoom in, you'll see that here's another one of my fib retracement lines. So this is what I saw. I saw that this blue line here, okay, which is around 24.31, or is 24.31. It's actually 24.32, but who cares about a pip? It overlapped with the M3, the weekly M3 on the hourly chart, and it overlapped with the within a couple pips of the R1, the daily R1. So on multiple time frames, we have either a fit. If you take these 3 time frames, when I say time frames, I'm not referring to the 4-hour, 1 hour, and 50-minute, but the monthly pivots, the weekly pivots, and the daily pivots, or say the monthly pivots and fibs, the weekly pivots and fibs, and the daily pivots and fibs, you will see that we hit a line on each one. Okay, we hit the 61.8/38.2 fib of last month's range, the M3 of the weekly M3, and the daily R1. So that was, to me, a reason to get out. Okay, and I got out, and I saw the price kind of broke it a little bit here, but it didn't break it here. So, I was happy to get out. In fact, I was actually thinking about entering a short, but I had things to do this morning, and I wasn't very impressed with the volatility of the market at that moment. So I didn't really get, I decided just to, get out and not get into another trade. I'm also in a contest right now. So far, these are my trades that I've done in the contest. I really hate losing 14 pips, but here we had a -3, a -14, a break even, and a -9, and a -27 here. But here's 122 positive, -7, a +32, and a +40. Here's where I am, where I started in the contest, and this is where I am now. At the moment, I'm ranked 158. Let's see, that might have changed. Yeah, I'm still at 158 now. If I entered the trade during the contest, I would have been up 50 pips, or almost 50 pips, and it probably would have moved me. It may have moved me probably 30 30 it would have increased my rank maybe by 30 points had I done that, but I didn't. But that's not a big deal. I like to trade contests. That's another way of making money when you're a trader. Once you know what you're doing, you can actually enter contests for cash prizes. But anyway, that was the entire point of this video, is to show you how using all these lines over the multiple time frames will put you in good trades, but keep you out of bad trades. Another trader, okay, might have saw the price was going up and up and up, and might have taken a retracement, such as this, okay, to enter a trade, okay, to enter a long, okay. And if you did enter it here on this retracement, yeah, you would have scalped a few pips, but not too many, and then it would have fallen, down, down here, which price is falling slowly, as you can see. But these lines will keep you out of trouble. Okay, you want to be aware of them. You want to have them in front of you. There's a lot of traders that they don't use these lines. They might be entering along right below the lines, and the last thing you want to do is enter along just below high levels of resistance. Resistance here, resistance here, resistance here. It's all overlapped. What you want to do is you want to wait till you have a gap on all the time frames. For example, here we got space right here. So if we're looking strictly at the 4-hour chart, you'll see that the next area of support is down here. This EMA here, the 13 EMA, of course, will more than likely act as brief support. I really would expect that price is going to fall down to about here based on the 4-hour time frame. Right here would be, if I was in a short, I would want to get out of it here, and I would be open to taking a long here, because here I got the 50% fib, I got my 21 EMA, I got my 233 right here. So this would be a really good area of overlap. Another reason is if I take this fib here, well, it would be like an area between the 21.4 and the 38.2 fib level, so that doesn't really hold a lot of weight. But what would hold weight would be this fib here, the 21 EMA, which has crossed above it, and the 233. And at some point, I believe that this is going to cross this. The 21 is going to cross the 233, which would be very bullish. In nature. So I'm going to wait for price to fall down to about here, and then I'm going to look for a long. Now let's look at the hourly chart. Oh, and let's keep this level in mind. It would be between 23.58 and 23.71. Maybe around 23.65 might be a good area to keep an eye on later on today. 23, 2365. Now let's look at the hourly chart with the weekly pivot points. 2365 would be, whoops, right here. So if price fell down to here, now we're going to have, we have this fib right here, 78.6/21.4. We have the 55 EMA, and we would probably poke our way out through this Bollinger Band right here. So this could be, this here agrees with the 4-hour chart with the monthly pivots. Now let's take a look here at the daily, which, by the way, by the time this happens, I'm going to have new pivot points already. The daily pivot points will have already changed. These will not change till 8 p.m. New York time, which would be midnight MT4 time. But 2365 would be, right now, what it would be is this. This would be the 2364. We have the daily M2. Okay, but that's going to change later on. But right about here at 2372, we have the 233 EMA. Now, since we had such a really narrow range today, I don't even think that these pivot points are going to change too much. So I would be really watching for price to continue to to fall, probably even through Asia, and then right around here, 2365, I'd be looking for reasons to go long, without a doubt, unless I saw the price is going to break this level and then it maybe retrace, and then if I saw red that it was going to continue to fall after the retracement, I would consider to take the short. But for right now, I'm really expecting price to come down to the 2365 levels and then head back up. By the way, I also want to mention, since I have the 15-minute chart expanded here, I want to point out here's the 144 EMA, which is just slightly below the fib level where the bounce took place last night. And this would have been another reason, to add to wanting to take that long. So you would have had at least 8 or 9 reasons to take that long when I did, right here. And so you don't have to be that, perfectly accurate. When you're already accurate as it is, you have different levels of accuracy. You want to be a good trader. You wouldn't have wanted to take a long here. Some traders would have watched what was happening here. They would have, saw prices rising, and then it would have retraced here, and a lot of them would have took that long, and they would have saw, their trade go up maybe 3 or 4 pips, but then it would have fallen, and then it would have retraced a little bit, reverse fibbed, and then it would have continued to fall. This you would have been way off base, but entering right off the central pivot point, even though it fell. Okay, I mean that's going to happen at times. Pivot points may be subjective. Maybe somebody else's pivot point chart might be central pivot point might show a few pips below. Mine does. Mine is extremely accurate. The point being that this is just a 10 pip zone here. So I was down 10 pips. No big deal. I still gleaned 50 pips on the demo account. So it all, proves one thing, that the system does work. Combining pivot points and fibs over the multiple time frames and combining it with the exponential moving averages that are also set at fib values holds a lot of weight in the market. It adds to extremely accurate trades. And I haven't even gone over the correlations, such as the dollar franc. By the way, these are, now some people ask me, what is it that I'm doing differently than anybody else? I mean, what's so great about pivot points on these charts? I could use a pivot point indicator for MT4. Well, I'm going to explain to you, why it's different. Very hard to trade price action using a pivot point chart. First of all, I can't put Bollinger Bands on these charts, because if I did, it would be really hard to read. Okay, and it's really hard to track price action on these type of charts when you have all these lines. You see, with the pivot point indicator, it's showing you the history of pivot points. So then you have just way too many lines. Whereas with my system that I use, that I develop myself, these are strictly the pivot points for, these are strictly the monthly pivot points. These lines mean nothing behind over here, only after this red vertical line. Same goes with this chart, which these are the weeklies, and this is the daily. Okay, so nothing behind this, nothing behind here matters. This, in other words, the central pivot point that you see here, this was not the central pivot point at this time yesterday. Okay, so, but that's what basically makes mine different. So I can't really trade. Now, why do I have this pivot point indicator here? I'm going to tell you why. If I go here to the dollar franc, okay, chart, you'll see that I got the same setup that I have on the other charts. By the way, you're not going to hear me talk too much about MACD and stochastics. They're not a big part of my strategy. However, I do like to be aware of them. In other words, I don't like to take longs when the MACD, when the stochastics is already in the overbought section. I don't really like to take longs. I'd be more apt to looking for a short, but I don't want to get into stochastics and MACDs today. But as you can see here, these are my pivot point charts for the dollar franc. So when I go to the dollar franc profile, this is what you're going to see. But I like to trade based on correlation. So if we go back to the euro dollar, and I've said it in previous videos that the dollar franc is the exact reciprocal of the euro dollar and dollar franc is their exact reciprocals of each other. And here, as you can see, I use this correlate. This is at forexticket.us. It's a site that has correlations, and if you look here at the daily correlation of the euro dollar, you will also see that the dollar franc is the perfect opposite. This is based on a daily chart, on daily correlation, hourly, and 5-minute correlation. So, for those of you that want to trade multiple currency pairs but don't have multiple monitors, like me, for example, you could easily trade the euro dollar and the dollar franc together. And you don't even always have to look at a dollar franc chart, even though I don't recommend it. But usually if you're going to enter a long on a euro dollar, you can almost feel comfortable entering a short on dollar franc and vice versa. Now, here we have the euro pound pivot points over the this is the monthly, weekly, daily. Dollar franc, monthly, weekly, daily. So I would be looking to enter trades off the euro dollar when I longs if I see that the euro pound looks bullish, and if I see that the dollar franc looks bearish. And if you look here, I established at 6 o'clock. I entered the trade at 6 o'clock in the morning, MT4 time, the long. So let's look at 6 o'clock in the morning on this chart right here. Well, there's no pivot points here, but we did poke the 21 EMA. But what happened here? 6 a.m. Okay, here at the same time, this is exactly the same thing. We poked the central pivot point at the same time. price was landing on the central pivot point on the euro dollar, the price was coming up to the central pivot point on the dollar franc, pierced it a little bit, and just as it did on the euro dollar, it came close to the 144 EMA and then dropped. So if you were looking at the dollar franc 15-minute chart, that would have gave you yet another reason to consider taking a long on euro dollar, because now you had currency correlation with another pair. Okay. So anyway, that is really my entire system. I look at multiple areas of support and resistance over multiple time frames and over correlating currency pairs. So I could have capitalized even further on this trade, entering it here. Okay, if I went ahead and by simply taking a short right here, and if I took a short here, just as with the euro dollar, I would have maybe gone just not even 10 pips negative, and then the market would have fell probably another 50 or so pips. Here's the 15-minute chart, euro dollar chart, and here is the 15-minute dollar franc chart. See right here. So at the same time I entered here, I could have easily entered here. And as you can see, price fell a little bit, came close to the 144 EMA. Same thing happened here. And then it tanked. So there you have it, a proven system that really works. It really does work. Now, this is not the what they call the Holy Grail. There's no such thing as a Holy Grail. Simply put, this is just a tool. It's a tool that'll keep you out of danger. It'll keep you out of trades when you shouldn't be trading, and it'll definitely keep you out of the bad trades, and it'll get you into the good trades simply by following a basic set of rules. I offer this system to clients for a total of $500, and what that includes is the spreadsheet. Okay, it includes all of my MT4 profiles, which are these, and of course you have to have these, you know, in order to utilize the spreadsheet. Of course, as you can see, this here, it all coordinates with all this. Okay, so see, perfect example is my profile here for the euro dollar is 1-EURUSD, and as you can see here, it's 1-EURUSD. So in my package, you're getting the spreadsheet, and not only are you getting the spreadsheet, but you're also getting the EA, the expert advisor that you're going to need to use with MT4 to get the data feed. And you're going to get all my profiles, and not only are you going to get my profiles, but you're going to get my custom indicators that I have, all for $500. And I'm going to set it up for you. I'm going to set it up for you on your computer remotely using TeamViewer, and you're also going to get a free mentorship from me for a period of time, for at least a month, and you're going to get personal assistance and support from me, all for $500. And when you really stop to think about it, you could easily lose $500 in just a few seconds by entering bad trades. And I can tell you that you can make thousands of dollars by entering good trades. We don't need to be greedy in this market. Sure, I like to make 100 to 200 pips a day. That's what I want to do. I want to make 100 to 250 pips a day. But that's not always realistic, since the currency pair's average range is about 120 pips. If you could get into 100 to 120 pip trade in a day, you've done great. If you get into 70 or 80 pip trades, you're really doing good. And if you can make a habit of that, the truth is, if you can make 40 to 50 pips a day, almost daily, and you don't give those pips back, you just set yourself with a discipline that I'm not going to overtrade, and I'm only going to enter the good trades. I'm not going to enter trades that have just one indicator telling me to go long or short or two. I'm not going to enter a trade based on just one or two reasons. I'm going to enter a trade based on 7 or 8 different reasons. I want it to be pivot points and fibs and EMAs, exponential moving averages, over the multiple time frames, and I want to get a little bit of correlation with correlated pairs. And those are going to get you into the ultimate trades. And occasionally the market's going to do whatever it wants, and sometimes you'll be wrong. But most of the time, you'll be right. If you follow this logic, okay, you will be right most of the time, and the odds will be in your favor. It's not hard to make 40 to 50 pips a day. Do the calculation. If you can make 40 to 50 pips a day, gosh, I cannot even tell you what kind of extreme wealth you're going to experience throughout your life. Once you can do that, you'll be able to do amazing things. 40 to 50 pips a day could be on a micro account. It could be $40 to $50 a day. On a mini account, it could be $400 to $500 a day. It could be on a standard account. It could be $4,000 to $5,000 a day. So anyway, that concludes this video, and keep an eye out for my future video for part 2 of my previous video, where I will enter a trade on video in real time. When I see the opportunity is going to arise, I will definitely do that. So until next time, this is Doug from forextradeplans.com. Please visit my website. If you have any questions, you need to talk to me about anything at all regarding my systems. You can reach me by email as well as by phone. I'm a very easily reachable guy. I'm down to earth. I'm not one of those arrogant, egotistical traders. So, with that being said, may the pips be with you. Have a great day.